Hello, everyone. Welcome to our Farm Financial Analysis Summary meetings. My name is Betsy Jensen, and I am a Farm Business Management Instructor at Northland Community and Technical College. We're doing this for the second year. Last year we couldn't meet in person, and we are a little bit nervous about meeting in person again this year. And so we've decided to put everything in this webinar series. So the one you are doing right now is number 5, crop marketing strategies. You will be able to find these other webinars nearby on this website as well. So let's get to talking about marketing, crop marketing. So what I want to kind of switch your minds this morning, I want you guys to switch your mentality and start asking yourselves, why should I hold and not why should I sell? Every day we look for a reason to sell, and I want you guys to think about, why should I hold? Why should I hold at these prices? 2020 crops versus 2021. And so the wheat will look the same, the corn, the soybeans, everything will look the same, but the crop years are significantly different. We do have a unique set of fundamentals for 2020 versus 2021. So just keep that in mind. If you happen to have old crop in your bin, that's a lot different than if you have new crop in your bin. So let's talk a little bit about that. If you guys recognize these Beanie Babies, how much were they worth in 1997, 98, somewhere late 90s? And how much are they worth today? We're going to talk a little bit about the right product at the right time in the right place. And that kind of defines our 2020 crops. We have the right product, the right place at the right time. It's kind of similar to these Beanie Babies. If you still had these Beanie Babies today, well, you're probably out of luck. I don't know what a Beanie Baby is worth, but there was a craze. To date myself, this was my craze, my Cabbage Patch Kid. I actually had 2 Cabbage Patch Kids, and if you guys aren't familiar with the Cabbage Patch Kid craze, go ahead and look. And how did I have 2 Cabbage Patch Kids during the peak of the craze? It wasn't that my family was wealthy and could pay hundreds of dollars for a doll. It was that my aunt was a flight attendant who happened to fly to Japan all the time, and nobody in Japan cared about Beanie Babies. Or sorry, Cabbage Patch Kids. Cabbage Patch Kids were just regularly priced over in Japan. And so when she would fly over to Japan, she would pick me up Cabbage Patch Kids. In hindsight, had we had eBay back in the Cabbage Patch craze, my aunt probably could have made a lot of money bringing home Cabbage Patch Kids and selling them on eBay. So I had 2 Cabbage Patch Kids. My friends had none, and I felt like a queen. But they came from Japan. The adoption papers were actually in Japanese. If you guys remember Cabbage Patch Kids, they came with adoption papers. So this was my first introduction to supply and demand. How was I lucky enough to get 2 Cabbage Patch Kids? And Mom had to sit me down and explain that we weren't millionaires. We just happened to have an aunt who was in the right place at the right time. So let's switch that back to commodities. Old crop is the right place at the right time. We know that we have very tight old crop corn and soybean stocks. And I think we're going to have tight new crop stocks. We don't know that for sure. That is the anticipation today. But we know that we have tight old crop corn and soybean stocks. And we see that in the basis and the futures levels. And so to capitalize on those old crop prices, we need the right crop at the right place at the right time. Today, locally, I have a corn basis of 10 under. 10 under. I would say our normal corn basis is probably 60 under. There have been times that we have had a little bit more than that. We've maybe gone to 50 or 40 under, but we are 10 under right now. But the only way to take advantage of it is if you actually have corn in your bin. You need to have the right crop in the right place at the right time. When it comes to new crop, we also have a decent basis. It's probably historically pretty good, but it's not like old crop, the amazing old crop basis that we have. New crop, they don't quite have the same demand at this time. And so old crop is right place, right time. So let's take a little look at some of these stocks. We just had a supply demand report out, and old crop US soybean stocks are 120 million bushels. That is a 2.6% stocks to use ratio. That means we pretty much don't have any soybeans left. We expect to have the bins almost completely empty on September 1st. That's when our marketing year ends. If we go back 2 years ago, just 2 years ago, we had 909 million bushels of ending stock. So in 2 years, we've gone from 909 down to 120. I mean, holy cow, that is amazing how fast we've drawn down our soybean stocks. 909 down to 120. So South America, they actually do seem to have a decent supply of soybeans, not excessive. They have ending stocks of just over 20%. The problem is that South America isn't always the best when it comes to shipping. Their reliability is a little questionable. And so we are fortunate in the US, we have the right commodity at the right place at the right time. And that's why we're seeing our soybean prices so strong right now. In the corn market, we have US old crop ending stocks of 1.352 billion bushels. That's about 9.1%. I'm going to show you guys, we thought we were going to have over 3 billion bushels of corn. That was our expected ending stocks number. And we often have over 2 billion bushels of corn at the end of the year. So this 1.352 billion bushels, that's pretty darn tight. I know it looks big at 9.1% compared to soybeans, but historically this is very strong. World ending stocks to use is over 20%. But USDA now is starting their supply demand tables have a little line excluding China. And so if we throw out China, the world stocks to use ratios are only 8.3%. China is a huge holder of commodities. And so USDA has finally started plugging in the numbers without China. If we threw China out of the situation, how much ending stocks would we have? And we only have 8.3%. So wheat, it's a different story in wheat. I'm sorry, guys. The stocks to use ratio is about 40%, and spring wheat is 42. So spring wheat is, we don't have any special things to discuss in spring wheat. It's about the same as every other, as the overall wheat picture. The world stocks to use ratio is 30. And once again, if we throw out China, we're at 18%. So China does hold a large amount of the of the world wheat stocks. So the world picture looks a little better. Our US supplies, though, are still pretty heavy. We've seen a good rally in spring wheat over the past week. Much of that has to do with weather. It's very dry in the northern plains. Even after 1 or 2 rains, it's still very dry. So there is some concern about plantings. What will we get planted for spring wheat and potential yields? But our stocks to use ratio for wheat is still very large. So I want to, if we can go in a time machine in May 2020. So May is when USDA releases their first supply demand report. So on May 12th of this year, we're going to see our first 2021 numbers. So a year ago, we thought we were going to have 3.318 billion bushels of corn. There is no way we were ever going to run out of corn. 3.318 billion bushels. Turns out in April of this year, just today, 1.35 billion bushels. So, we lost 2 billion bushels of corn from where we thought we were going to be a year ago. And so if you're trying to understand how did price outlook change so much, we lost 2 billion bushels of corn. And we're going to go look at that. Wheat isn't that far off. We thought we were going to have 909. We're ending up at 852. It's a little better, but it certainly isn't screaming bullish. And soybeans, we were 405 million bushels of ending stocks is a little bit of a concern. And we actually ended up at 120. So huge change in soybeans. Soybeans were already kind of tight, and then now we've gone down to 120 million bushels of ending stocks, and that's extremely tight. But corn is the big one to look at. Good grief, we lost 2 billion bushels of corn from where we thought we were going to be. So I want you guys to keep this in mind. We're going to come out with numbers in May again, and this is how much they can change from one year to the next, okay? This is just May 2020. This was our initial forecast based on supply and demand, and it certainly did not end up looking like that. So the numbers that we have in May is just the starting line. There's still quite a bit of the race that needs to be run. So how did things change? In the soybean market, it was all demand. Our production was pretty darn close to where we thought it was going to be. And I mean, it was all demand. China came in to buy some. South America had some crop problems. Soybeans, that stocks number changed because of demand. In corn, it was all lower production. We ended up producing fewer bushels than we thought. And if you go back a year ago, May 2020, nobody was driving, right? We weren't using any gas. Fuel prices were a record low. Nobody was commuting to work. Everyone was staying home. We were never going to use enough ethanol. We thought that demand was going to take a significant cut as well. And so that was part of the reason why corn prices were depressed. We were going to produce all this corn. We weren't going to be using any of it, and everyone was a little bit nervous. Well, turns out driving picked back up. Ethanol's looking good. And then wheat, really, we didn't have a significant change from that initial supply and demand. A few tweaks here and there, but nothing significant. So on Wednesday, May 12th, USDA will issue their first 2021 supply demand tables. May 12th. May 12th. Put that on your calendar, May 12th. You should anticipate large price movements that day. I mean, it's going to be a big one. And I guess I would say if you're happy with prices on May 12th, you should price something on May 11th because the 12th could bring big changes. It should probably be something on your calendar. You should get something done by May 11th. So just remember, things can change quickly, and I don't want you guys to ever think never say never. Don't ever never say never. So we had two extremes. If you remember in 2019, we were planting corn so late. Oh my gosh, we were never going to produce enough corn. The market was going to go to $7. Honestly, $7 corn was mentioned several times in the spring, and it was throughout April and May. We even kept planting into June. And so we were never going to produce a large enough corn crop, and we did. In 2020, our initial stocks projections were so large we would never have high prices. There is no way we could have a production problem or demand change to make corn bullish. We're going to have 3 billion bushels of corn. What were we going to do with all of it? And so I just want you guys to remember how much things can change from one year to the next. In 2019, we went from bullish to bearish. And in 2020, we went from bearish to bullish. I don't know what's going to happen in 2021. We are currently bullish. This is my current attitude, you guys. This is the bull on Wall Street. And this, of course, was taken several years ago when we didn't have to wear masks and you could go to New York. But I admit, I'm bullish right now. There's no reason to not be bullish. Things look like we're never going to produce enough corn or soybeans again. And so that's a challenge. How do you market when you're bullish? It's so hard because everything is telling you to hold. If we have crop problems, we're going to have higher prices this fall, maybe higher than today. But we do need to ask, how long can high prices last? For example, wheat is harvested around the world almost on a steady basis. If corn and soybean prices go higher, rest assured South America will plant more acres. And so how long can those high prices last? So I want to bring this up again. I just want to reiterate, never say never. This is where we were a year ago versus where we are today. USDA was way off. The market was way off. Everyone believed this too. I say USDA, but honestly, everyone believed this. We were going to have 3 billion bushels of corn. We were never going to run out of corn. We were never going to run out of wheat, which we still haven't. Soybeans, we were never going to run out of soybeans. Stocks were going to be a little tight, but nothing urgent. And things have definitely changed. So let's take a look at some of my crop resolutions. So here's what this is me personally. You guys can, of course, do whatever you want. Cash only contracting. Good grief. I am a horrible, horrible basis fixed contractor. I don't know. I can't do it. I call it wrong every time. So I'm done. I'm just going to take the cash only contracting. Even right now, I still have a few bushels of old crop corn left. And so we were debating, do we do a 10 under basis? And I said, nope, let's just deliver it right now as it is, cash contract. I don't even want to deal with that basis. And so for 2021, I want to have 40 to 50% of my crop contracted by May 11th. If prices continue to go higher, make another sale after the report. These prices are just too good to pass up. And I know May 11th is kind of early to be doing that, but I just want to make sure I'm taking advantage of what we're going to be having for prices out there. If it's profitable, I really don't want to miss out. So put options at this time are not on my radar. I've looked them up, but if things go crazy this summer, I'm going to be buying puts. Okay. If we go to $15 soybeans, I will buy put options. If we go to $6 corn, $7 corn, I will buy put options. Heck, even if spring wheat gets close to $7, perhaps I want to buy some probably Chicago put options, not Minneapolis. But at this time, they're not on my radar, but it is an alternative for the future. Okay, what about my old crop? Seriously, if you still have it, good for you. I have no advice when it comes to old crop. Just keep trickling it out as you go. Last year in 2020, when I did your cash flow, I told you that we had to use $8.40 for soybeans. And they're currently 13 something. So you're doing great. Corn, I think we used 340 and we're now like 550. So spring wheat is $6. We probably used 5.25. So if you still have old crop, good for you. Just trickle it out as you keep going. You've done well. I wish I had all my old crop as well, but I do not. So here is a December 2021 corn chart. I did highlight a gap on there. If you look at that gold circle, there's a gap from about 477.5 up to like 480.5. It's a small gap. And we do remember gaps are meant to be filled on the charts. And so expect that gap will be filled. If the gap remains, for example, it's called an island top. And so if the market goes down sharply and leaves a gap on the way down, we leave like a little island at the top of the chart, if that makes sense to you guys. That is a reason to be concerned. But at this time, we should go down and fill that gap before we go higher. So kind of keep an eye on that probably over the next month to see what the market is going to be doing. If we can go down and fill that gap and then take off and go higher after that is kind of the hope. Here's November's soybeans. We almost have beans in the teens for new crop, you guys. Never thought I would see that. And so this is just an amazing chart. When you think about a year ago, we were looking at 8.25 futures, and now we're at 1275, 1263 is where we closed. Just incredible to have that price movement. And I've struggled to understand if you guys are not pricing some of this crop. No, sir, I priced some too early at $10. I'll admit it. But it's hard to, if you have soybeans that you can continue to sell, I really don't understand why you would not sell them. And then spring wheat. So I know spring wheat we kind of joke about a little bit, but spring wheat's come a long ways too. We did go up to about 6 level almost twice. I usually sell spring wheat off the combine. I usually sell soybeans and corn off the combine to generate cash flow. My spring wheat goes into the bin. The chart looks pretty good. Like I said, this past couple days have been some dryness concerns. And I want to use spring wheat here as a kind of a crazy technical idea. I do always like the Fibonacci retracement. If you guys have heard me talk before, Fibonacci, you can look it up. He's a mathematician from long, long ago. And the Fibonacci numbers are everywhere. So if a chart has a high and a low, so that's the first thing. It has to have a high and a low. If we go back and look at spring wheat, we have a high and a low, like roughly about 580 is where we went at the beginning of December, up to about 680, so roughly $1. So if it has a high and a low, it's going to retrace itself 38.2%, 50%, or 61.8%. And so if we do look at spring wheat, if our low was was actually like 579, our high was 680, I just called it $1. The prices should drop 38.50 or 61.8. And our recent drop here, this drop down, was 54 cents. Okay, so it did pretty good. If you have a high and a low in the market, things tend to retrace itself. Okay, this is almost like a correction line, we can call it. So an idea, let's say it's the summer, you think you've sold too much, okay? And now prices have dropped. So you've been sweating all summer because you sold too much corn, you sold too many soybeans, and now the market's had a correction. Let's say it's July 4th, the weather's perfect, there's good moisture, everyone's anticipating a huge crop. And so the market starts dropping. You can use the retracement to kind of help determine when to buy call options. Okay, so if you're thinking, good grief, I sold too many beans for $12, you can use a retracement to decide when you want to buy those call options. And so you can kind of maybe buy a call option at the first retracement, maybe another at the 50%, and then the final one at that third level. But remember, the market has to have a high and has a top and a bottom. At this time, the corn and soybeans do not have a top and a bottom. Things have continued to go higher. So things actually have to turn around. And so a retracement kind of tells you how far will the market turn around and still stay in that uptrend. And so this is always an alternative. I really don't want you guys to re-own your positions and totally get out of them. But this is maybe when call options are going to help you sleep at night if you feel like you've sold too many. And then heck, if the market takes off and goes higher, you can always sell more because you do have some call options in your account. So my goal for you guys is to take a cookie whenever the plate of cookies goes around the table. Don't forget to grab a few and take profits when they're available like they are today. Something else, if you guys get a chance, I don't know if you guys have a calendar hanging up in your office. I got one right over there. I can point to where my husband writes down all the hoarfrost. Do you guys do that? Because the hoarfrost in November, December, January help determine the rains, right? I think most farmers I've been into your offices. Most of you guys have something like that. So what I want you guys to do, you have that calendar hanging up, go out there and just for fun, write down a price of wheat on September 15th, maybe corn and soybeans. Just put today's date, April 9th, and just kind of jot those down. And so when you're flipping through the calendar in a few months, you're going to notice those little notations and maybe you'll be accurate. Maybe you'll get a good laugh out of it, but it's something fun to just kind of write down on a calendar. What do you think prices are going to be? You can write it, October, November, whatever it is. Pick a date and just jot it down on your calendar. You can do it in pencil too, so you can erase it if you're way off. But it kind of helps to show how poor of a job we do at trying to predict prices. You know, when we had 3 billion bushels of corn last year, we were going to have prices down in the 250s probably. And it turns out we're at 550 instead. All right, so that concludes this webinar. We are Farm Business Management in the state of Minnesota. We got 68 instructors at 8 colleges. And if you want more information, Northland College, that's where I am hosted. There is my email address. You can also find us at AgCentric, the Southern Minnesota Center of Agriculture. And then as always, for you, if you guys are data geeks like myself, the FinBin database at the Center for Farm Financial Management is one of my favorite places to go for financial data, especially if you want to be benchmarking yourself. So email me if you have any questions. Good luck in the fields this spring, and let's hope we get higher prices throughout the summer. That's the best case scenario for all of us. Thanks, guys.